What is good, guys? It's Rey-Jay back with another video. And in this one, I want to talk about something very important about day trading. Let me first mention that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit 1,000, you're guaranteed 15 in total. Anyways, guys, I've been looking at the charts for quite some time, and I just wanted to say that for this video, I don't really want to focus too much on just like charting. Instead, I just wanted to talk to you guys very simply about some important trading lessons that I have and something I think that I could say that could really benefit you guys. So one thing about day trading I wanted to say is that different people have different strategies. Some people like to scalp, some people like to swing. Sometimes it can be really difficult to do either of those when the market is just so volatile and so crazy and very tricky to predict. So I just want to say that a strategy that worked really well for me, especially in this market, is just scalping and also just intraday day trading. So getting in and getting out the same day. That's worked very, very well. But here's a very, very important thing I was talking to my friends about, which I really want to share with you guys. And that is how I became more profitable with my day trading. And it's actually very simple. This is one strategy that I used. You don't have to copy me completely, but I think that once I explain this to you, it's going to make a lot of sense. And I think that by explaining this, it's going to provide some wisdom that could really improve your own trading. So listen to this very carefully. I never enter a trade unless I see a good setup and a good entry. Plain and simple, right? Don't trade. Stay away. Hold cash. Okay. And wait for the entry, wait for the setup. Once you get the setup, look for a good entry point. Be very patient. You're going to need a lot of patience when trying to play this game. And then that's when you strike. One analogy I oftentimes use is you're like a sniper. You're waiting patiently, quietly. You wait, and then you strike once the time comes. That sounds so simple, so basic, but this could take you from losing money to becoming a lot more profitable to eventually scale up to make millions of dollars. And that sounds crazy. It sounds unbelievable. But once you understand how simple this strategy is, it makes a lot of sense. Different people have different ways of day trading. So what I would recommend is this: get a pen and paper or have some kind of way of taking notes and try to track your trades. Track which trades are more successful, which trades are not successful, and you also want to know how often do you win. You want a lot of data to kind of like work with. Then you have to remember that when you day trade, you want to be picky, and that comes from confidence and also from patience. You want to be picky. You don't want to just throw your money in just for the sake of doing it. I used to make a mistake, guys. Let me explain what this mistake was. Imagine I have like $10,000 in an account. I want to trade with like $2,000, $3,000 a day. Hypothetically, that's what I would do when I was younger, when I used to start day trading. And what I would do is I would just try my best to use up as much money as I can to make as much money as I can every single day. That was an old mistake I would make. And if you overtrade, you're at risk of basically looking for entries that aren't as good and then simultaneously kind of just blowing your account, using too much of your account. You don't want to use way too much of your account, of course. You want to just manage risks very well with the way that you go about things. But I want to make that very clear from the way that I strategize when it comes to making gains. But always remember this lesson. I want you to remember this for the rest of your life every time you day trade. Don't enter anything until you see a good entry or a good setup. Always remember that. So for me, there was a lot of times when I see the market making a big move, I just start to FOMO in. I just start to just jump in, thinking that I'm about to make a great move, about to make a lot of gains, but it doesn't make sense to enter during certain phases. So an example would be like, if you look at SPY right over here, when you're looking at the trend and it looked really bullish, right? Right here, when SPY starts breaking out like this, you don't just want to start buying in just like this. You oftentimes want to see it try to push higher, look for a good dip for entry, and when it starts turning, when you start to get bullish signals like right here on our MACD, you want to be entering during dips like this. This is when you want to go long. You want to short the market. What was the shorts thesis? Well, you could have looked at the structure and seen, hey, there's a double top right here. Maybe I'm going to try a short right here. That could have worked, but you want to have a stop loss just in case something doesn't go right. So I just want to say that what I would do is if I was trying to scalp or something, I'm just sitting on cash. Okay. This is not including my investments. Investments are different from trades. I like to keep investments separate because I'm always going to be investing in stocks like Nvidia and stocks like Tesla, the Apples out there, long term investments, also small caps and such. I'm not referring to those. I'm just referring to my day trades. If I have like a cash account, hypothetically, just hypothetically, if I were to do something like that, or if I were to try something different. But if I'm day trading, if I'm trying to scalp, I oftentimes, if I don't have any plays, I'm holding cash. I'm just holding cash and I'm waiting very patiently for that good entry. I'm not going to just jump in for no reason. I'm not just going to jump in for no reason whatsoever, just for the sake of trying to make money. I don't chase money. I chase setups. I chase a good entry. I chase a very, very good looking moment, right? You want to set yourself to kind of look at those. Then also, you want to look at things from a percentage basis. So, can I gain a 20% off this trade, off this scalp? Can I make 30%? And does that align with my risk management if I have a stop set for 10%? So, utilize stops, and then you have to try to position yourself so that you want to make your wins bigger and your losses smaller. You could also use trailing stops and different strategies like that just to like make your gains bigger. But remember, and this is what I keep going back to, and oftentimes reminded about this. Okay, sometimes if it's hard to trade SPY, or if you don't really like what you're seeing on SPY, you could even look at other tickers. You could even look at different stocks out there. You don't always have to just trade one ticker. It is good to have one ticker primarily that you do trade. Like, so I primarily trade SPY. Also, ES, if I try to trade futures some days. It really depends on my mood and how I'm feeling. SPY and ES are my two favorites, but I want to make it very clear that when it comes to the way that I go about things, I tend to be very patient with them and very picky with my trades. So focus on the quality of the trade and not the quantity of them. You don't want to just make a million trades in a day hoping to make, a lot of money. You don't want to do more than 10, 20 trades. Sometimes you just want to keep it simple and go for less trades and just look for, very, very high quality moves. That could be a lot more effective as well. So remember, your job here is to make money. So when you day trade, you're playing a video game. You want to basically protect your assets, they're like your resources. You want to keep winning, and you want to do what you can to make sure you don't lose too much. That's how you play the game of day trading, and that's how you have to remember this. So I think the best thing that helped me during a market like this was stepping back and not trading, watching for the good moment of entry. You have to be very picky with those entries. Very, very picky. And being picky means, I would say, you become pickier the longer you watch the charts. So I spend more time just watching the charts than actually day trading, because watching the charts helps you kind of like build some instincts. Sometimes you could be looking at just price action. I've seen traders who make a lot of money just by looking at price action alone. Sometimes I use all my indicators combined to look for confluences, but I do all kinds of different things when it comes to the way I watch the way the market moves. So remember the simple lesson, okay? Trading does not have to be complicated. Make it very simple and look for some indicators that tend to work and different things like that. But remember, I want you guys to know that when you're trying to trade, don't enter. Step aside. Wait. Wait for that good entry. Wait, wait, wait. And that's what's going to make you a lot more successful in this game. I also recommend that you could look at much bigger time frames. The 4 hour could be very, very useful for finding support and resistance levels. Also, the 30 minutes time frame is also a really good one. I tend to use that too. So you guys can see how the market is kind of moving, and you guys could like look at patterns that you see. You could use EMAs for nice support and resistance levels. You could chart looking at different levels. One common thing that the market loves to do is test previous resistance becoming support. So basically, we had resistance right here at 563.5. This is where SPY rejected. So this is previous resistance. This is going to be one resistance level, right? We have another resistance right here. So if you look at the chart, you guys can see it right here. This 561.7 areas. This is where we get these levels from. And then our next level is 560, the psychological level, and then we have another set of them based off previous price action. But that's what's kind of like dictating our moves right over here. And then when I talk about these levels, I just drew these out based off previous historical price action. I'll also look at Fibonacci retracements using certain tools just to like see them. I'm not going to go over everything today, but I just want to say that those are some ways you could actually look at levels. Look left on the chart, look at previous resistance levels, and also look for lots of moments where the stock rejects at a certain level. So, like for example, 561.7. How did I calculate that? We got one rejection here. We got another rejection here. Another moment where we tried to break through this and come back down. So lots of touches, lots of rejections shows us that's one significant level. And that's how you calculate that level right over there. How did we calculate 563.7? Well, that's actually very close to this range right over here of resistance, which is where we rejected from multiple times. That's how we calculate a lot of these levels, not to mention Fibonacci retracements. I sometimes utilize those and I use different tools for those. And also EMAs are very important for supply and demand. So I use all of those together. But that's how I basically go about my supply and demand zones and kind of look at levels. And I also look at patterns based off bigger time frames. But with that being said, guys, I just want to say that I want you guys to just take away the lesson I have for this video, which is sometimes if you want to scalp, you could scalp. Or if you want to day trade, you could. Sometimes swing trading could be more advantageous, whatever you want to do. But whether you're swing trading, whether you're day trading, whatever you're doing, don't throw your money and lose it. Don't throw your money wastelessly. Don't use your money ineffectively. Wait, be patient, look for a good entry. And once you find that entry, that's going to be the moment for you to strike. Okay. That's the way to go about it. Don't just hold cash, right? If you don't have any plays, hold cash. I'm just referring to day trading, not shares or long term investments. I'm just referring to day trading. Hold cash, wait for that entry, and then enter. And that's how you could grow a portfolio really, really quickly. It sounds very trivial, very simple, but that is one really useful strategy that a lot of people do. And maybe you could have many different plays at once. Well, you have to find those entries. Okay. That's how I would go about it. That's a very, very simple strategy. That's worked very, very well for me. And it's the most simple thing in the world, yet it works so effectively. So I just want to say that that's one strategy that you could utilize. Maybe you could find more strategies on YouTube. Whatever you guys want to do, that's you have the freedom to do that. That's something I love about day trading. We have so much freedom with different strategies and such. But always remember to track what you're doing, look at what works, and then be very patient with the way you go about things. You have to have a lot of patience in life, especially with your day trading, especially with the ways to make money. All right. So I want to thank you for listening. I hope you guys have a great weekend. I'll see you guys very soon in the next one. I really appreciate you guys for your attention. Thank you so much for listening and have a great weekend. Uh, get ready for more volatility for the markets very soon, as I will be talking about that later on. Until I see you guys again, have a great day and peace out.